The Great Depression was a global economic crisis that rattled the world to its core. This picture, taken by Dorothea Lange in 1936, depicts destitute pea pickers in California. The woman is Florence Owens Thompson, a 32-year-old mother of 7. Florence was traveling with her family when the timing chain on their car snapped, and they coasted to a stop at a camp of 2,500 people, all out of work. When the photo was taken, they had just sold the tires off their car to buy some food. The images come to symbolize the angst and despair of the Depression, which carelessly threw millions of innocent people into the awful throes of poverty. Our story of the Great Depression starts in late October 1929. The economy had just experienced a decade of strong economic growth and prosperity. If you had invested $1,000 in 1921, a decent annual salary for the time, you would have had about $6,000 by 1929. But in the summer of 1929, things started to stall. During the 20s, optimism about the future was high, and many Americans accepted newly available offers of credit in order to buy what they could not afford from their own wallets. They bought new wonders like radios, electric refrigerators, and most visibly, they bought cars, all on installment plans, which more than doubled household debt. At the time, the stock market had become a curiosity to most Americans, who kept hearing about traders making fortunes. The chart here shows the amount of money being lent to traders by their brokers so they could buy stocks on margin. The stock market had become one giant financial bubble, driven both by the credit pushing up revenues for businesses listed on the exchange and credit being used to buy the stocks on margin. Everyone was operating on the greater fool theory, planning to cash out before prices fell. The financier Joseph P. Kennedy, one of the richest men in the world at the time and the father of future President John F. Kennedy, liquidated his stocks in 1928 and early 1929, saying, "Only a fool holds out for the top dollar." Legend has it that he decided to sell when he got a stock tip from a shoeshine boy, intuiting that if his money was in the market, there were no fools left to push prices any higher. Kennedy would eventually be appointed as the first chairman of the Securities and Exchange Commission, regulating Wall Street wrongdoing under President Roosevelt. With the credit starting to dry up, households started to work on paying down their debts, slowing their purchases of the big ticket items. From the beginning of the year to October, the unemployment rate had jumped by 2.3 percentage points, creating the first unemployment problem in a long while. Auto sales, which had been a major driver of rising stock prices, had started to fall, and department store revenues were dropping too. Whispers started to circulate that the U.S. was entering a recession. Then came Black Thursday, when panic and uncertainty hit Wall Street. With a decade of rising stock prices, many had overextended themselves on their margin accounts. They had borrowed significant amounts of money and put it all into the market, certain that the good times would keep on coming and they would be able to make a fortune. On that Thursday, the Dow Jones Industrial Average fell by 11% the moment the stock market opened in the morning. Billions of dollars had been lost in an instant, and panic started to spread. A group of prominent bankers, and viewers, I have to tell you, these guys were not good dudes, among them eventual Nazi sympathizers. But nevertheless, they were the ones with the money, and they did their best to repeat the success of J.P. Morgan in 1907. Since the panic was just in the stock market and not in banks, the Federal Reserve didn't step in. Their aim is overall economic stability, not stability in the portfolios of a bunch of Wall Street brokers. But the efforts of the bankers to push up stock prices seemed to work, and the Dow Jones closed just 2% below its opening price. On Friday, there was some more ups and downs, but for the most part, the markets were calm and closed just a couple of points above their opening price. But over the weekend, papers covered the events of the past couple days, and most people were feeling it was time to get out while they still could. When the New York Stock Exchange opened back up on Monday, the Dow Jones fell by 13%, and this time it didn't recover. News spread quickly, and anyone who wasn't sure on Monday was ready to sell on Tuesday, when stocks dropped another 12%. In just 2 days, nearly a quarter of the value of the stock market had been lost. Hundreds of investors, especially those who bought on margin, were completely wiped out. Nevertheless, optimism generally persisted. Many believed this was just a brief crash in the stock market and nothing to worry about. These things happen. And while the next 2 months were rough for investors, with the stock market losing about half of its previous value, the market turned upward in early 1930, recovering a good chunk of what was lost. Most expected things to recover quickly after that, and that growth would continue again. President Herbert Hoover said, "Any lack of confidence in the economic future or the basic strength of business in the United States is foolish." The optimism lasted through March of 1930, but it was followed by 4 years of economic decline. After the stock market crash came a series of banking panics in 1930 and 1931, and then a series of national and international financial crises from 1931 through 1933. The downturn hit bottom in 1933 when the commercial banking system completely collapsed. The Great Crash of 1929 gets a lot of attention and is popularly thought of as the cause of the Great Depression. But it isn't as important to our story as it may seem. While the crash of 1929 curtailed economic activity, its impact faded within a few months, and by the fall of 1930, economic recovery appeared imminent. Then, problems in another portion of the financial system turned what may have been a short, sharp recession into our nation's longest, deepest depression.